Did you know that missing 5 days, market days on Bitcoin can actually completely wreck your performances, your gains? And that actually is another appearance, or how can I say, manifestation of what is called the Pareto principle or the 80-20 rule, which basically tells us that it's not like things follow exactly that rule, but we do see it happening a lot around us in our society and nature, etc. Which basically tells us that 80% of consequences come from 20% of causes. Typically in a business, you will often see that 80% of the revenue is only generated by 20% of the clients. In investments, for example, you will see that 80% of your gains that you make can come only from 20% of your total investments. So I was thinking, how does this apply to BTC? And it actually applies even more than you think so. I did this very silly little Python code to show you exactly how it goes. So I'm just going to run it and explain to you very briefly what happens. What I do here is that I just simply download the BTC USDT prices for the year 2024. Shove them into some tables, do a bit of computations here where I first compute the daily returns. So you see here, and then from that, I can compute the cumulative returns. So I get the cumulative returns over 2024. Then what I do is that I compare two things, the cumulative returns here in blue, the natural ones, and then another one where from my cumulative returns, what I do is I delete the 5 most powerful, most important days of profits of BTC. What happens from there? When I do that, if I remove 5 days, my cumulative returns by the end of 2024 move from what? About 110% down to 30% that you see here, which is quite crazy, right? I only remove the 5 top most performing days in the whole year of BTC, and the cumulative returns dropped from 110 to around 30%. That's crazy. Let's go further. Let's actually try now, because you're thinking like 5 days out of 365 is nothing, but there you go. Let's now do 10 days. I'll run this again and we'll see how it goes. We actually now have a negative performance if we've removed 10 of the top days, which means that most of the of the BTC pumps, most of the profits that are made from, that you can make from BTC only come from a few select days. This is pretty crazy. I mean, I wasn't exactly expecting this. That kind of means that the rule is not kind of 80-20, beg your pardon, but more like 99-1%. So this is, I think, super important to understand about the market BTC and how it works. And so one should know that only a few days are very important. So it also means that it's one of the reasons why a lot of people say that it's very difficult to time the market. Is, if you miss a few of those days, you could have your whole performance wrecked. It also means something else. Like in this channel, we do a lot of automated trading bots, building them in Python, etc. So what it means, especially with trend following strategies, it means that the Pareto principle will also really apply there. Across all the trades that your trading bot will do throughout the year or years or months, actually most of your profits will come from a few trades. Maybe you'll have 500 trades in a year, but maybe only 20 or 10% of those will actually make for the most of your profits. So when you're looking at the trades of your trading bots and things like that, and you're thinking, it hasn't done a lot of profits in a long time or something like that, well, you should know that this is kind of the Pareto's principle here, is that most of your gains will come only from a few trades. And that's the way it is. Anyway, I'll put this little code on our channel's GitHub, so you'll have a link down below in case you want to access it and do your own testing, whatever. And also, as usual, remember this video is not financial advice. I'm not a financial advisor, just me sharing my enthusiasm, my little fun, etc. about all of this. Anyways, happy trading, take care, and see you soon.